Okay, we're back for another review. Today is Tuesday, November 22nd, 2022. And today was just an excellent day. Very, very happy with how I traded today. And I'm excited to break it all down because there's some lessons that I want to remember for the future because it was very logical, very methodical, very reacting to what the market is showing and being fluid, having the flexibility to consider multiple scenarios at the start of the week and at the end of yesterday and read the market in a particular way to determine, okay, what's the best way to position myself? What's the best bias to have for this particular day? Let's begin by looking at the weekly chart of Nasdaq. I've said every day this week that I'm paying attention to last week's low. I'm not going to get into all the reasons why, but you can check that out if you want on one of the earlier reviews from this week. But I've been saying all along that this low is very important to me. Just as I was saying that the dollar index had a high that I was very interested in. Here I have two charts side by side. I have the dollar index on the left and I have Nasdaq on the right. And both of them are showing the key weekly levels that I've been talking about all week. So Nasdaq, here's last week's low, and for dollar, here's last week's high. Now, what I said yesterday, number one, if I go to the 4-hour, we had seen that on Monday, dollar had impulsed above last week's high. And we were bearish on indices because we were above this level and we had created this gap and we were as of that point holding this gap. And so we went short and we got 2R on S&P yesterday. But then I said that I need to see this hold. I wanted this low right here. Was it here? Yeah, I think it was this, that I wanted this to hold right here. And I wanted to see a bounce. I wanted to see this hold and I wanted to see the bounce for me to continue to be bearish. And that's actually what I thought was going to happen. I mean, I had no reason to think that we weren't going to do this. I was just taking what the market was showing me. But I did notice that we had this gap right here. And I thought that, hey, it's possible that we take this, hit this gap, clear the liquidity above these highs, and then work our way down. And, maybe then head towards these lows right here. Nasdaq had not hit previous week's low. I did say that if dollar was going to lose this gap at the same time that Nasdaq was going to show rejection off of previous week's low, that I would be not comfortable selling Nasdaq. I would just probably sit on the sideline, stay neutral, or lean bullish. Because when dollar was losing this support here, Nasdaq was rejecting off of this level a couple times. So I had outlined a plan where I was bearish indices to start the week based on a certain framework, based on a certain logic. And at the same time, I identified an invalidation for that idea, for a scenario that would make me change my bias from being bearish on indices to being neutral or potentially bullish. And so I didn't see a trade on Nasdaq today, but I did see another trade on S&P, and I'll explain why. But I did use Nasdaq as a barometer for my bias. So I saw that this was not likely to go down because of these rejections and because dollar was failing this level. The reason why I focused on S&P is pretty clear of this divergence here. From Monday's low to Tuesday's low, we're making a higher low on S&P. And from Monday's low to Tuesday's low, we are making a lower low on Nasdaq. So between these two, S&P is stronger. S&P is stronger, but yet we've already established that I'm bullish, or not bearish at least, and have reason to consider buying Nasdaq based on the relationship with the dollar and the rejection off these levels. Back to the trade for today. So if I go to S&P chart, so let's take a look at what happened today. So we have Asia range, London breaks down, V reversal. Okay. Leaving this imbalance that gets respected really well. Rally. Now we're above Asia's high. So what are the chances that we're going to now, sell off and make a new low? I feel like it's very unlikely, and we are more likely to be seeing this as a classic ICT buy day where we see a low made at the beginning of London and an expansion higher. Now at the start of New York Open, we get a sharp sell-off right here, this candle. It just took out some liquidity on the lower time frame and hit this imbalance. I wasn't going to just buy here, although you could have, but I just didn't know. This is the very beginning of the open, and I didn't know exactly where I wanted to buy. Now we're on an hourly chart, and I just want to look at the same thing. Asia range, look at the wick below. This is the sort of false move down. And look at this candle. Very strong close, engulfing candle, order block. Okay. Price comes in on this hour here. Big wick reaction off of this. Next candle, we get another order block, another engulfing. Strong closes near the highs. Very tiny wicks right here. Then we get a pullback again into the order block. So we're just stacking bullish price action here. It's order block, order block, order block, engulfing candle. So, what are the odds that we're just coming up here only to sell off? Very, very low in my opinion. The low of day is likely in, and we're looking for a trend to form. So I got in here, and I'll show you why on the 1 hour. So all of this preceding price action was very bullish. Then we get this expansion above Monday's high. And I wanted to see evidence that we were going to hold Monday's high. You can see that I got in on this essentially after this, anticipating that this would close as it did, reacting off of the high, reacting off of the wick of this order block right here. And there's lower time frame triggers that of course got me into the trade, but just looking at it from an hourly perspective, this is what I was, expecting to play out at this point. And so this is where this was a good point to buy, and my target was 2.5 R. Now we're on the 15-minute chart. So this is New York Stock Exchange open. If we just look at the confluences, spikes down, takes the liquidity here, big reaction, amazing close above previous day's high, leaving this imbalance. Price wicks into this imbalance, creates an engulfing structure, order block, whatever you want to call it, right at the level. So this is the 15-minute imbalance. Once price broke structure to the upside here, came down, tested that 15-minute imbalance, then broke structure again, clearing these highs, creating a new imbalance on the 5-minute. I was very eager to buy. I should have bought actually right here, but I waited for a little bit more confirmation. I saw this candle spike into it and give this close, and then I bought at market right there. And I bought a little bit more as it was coming down a little bit more too. And I had my stop below here. And I just had so much confirmation, so much confluence for all the reasons that I mentioned so far that I felt just very comfortable taking this trade and holding to target. I didn't even really trail my stop. I think once I got to here, I trailed it. So it worked out very well. It was just a great day for me because I just felt, a little bit not disappointed that the bearish scenario didn't play out. But I was like, okay, I guess there probably won't be a trade for me today because I saw the invalidation on Nasdaq with that previous week's low. I saw that invalidation. And I knew, okay, I wasn't going to look for any shorts. I actually thought the market would just could just stay range bound on NASDAQ. But so I got the invalidation for shorting NASDAQ pretty clearly here when it was rejecting off of previous week's low. But I wasn't really looking for a buy just yet. It wasn't until I saw S&P, the divergence on the hourly and how much stronger it looked versus NASDAQ, and just saw the bullish price action playing out and unfolding on the lower time frames that it made sense to buy. So that's the review on that trade today. It's the only trade I took. Now let's just zoom out, because what are we going to expect for the rest of the week? Well, there's always a chance that now we rejected off previous week's low. We could be heading towards previous week's high. Now, I'm not going to predict anything because we have FOMC on Wednesday, and I have no idea. In fact, this could just be a bullish candle, showing a false sense of support here that then gets completely engulfed to the downside. That could happen. I have no idea if that's going to happen or not. I don't think it's as likely at this point, but it could certainly happen. I now think that this daily range I've been mentioning, this is the daily consolidation I've been mentioning this week. If we just look at the bodies, we have 1, 2, 3, 4, 5, 6 days closing within this tight little range here. All efforts to get outside the range have been rejected. So I thought when we got this close right here on Monday, I thought, okay, we're probably going to roll over now. But instead, we shot back into the range. And so now I kind of see this as, accumulation, manipulation, possible distribution now to the upside. Kind of an exaggerated expansion, but that's kind of how I'm seeing it right now. And it's just because I'm taking it day by day. Yesterday I thought it was going to be bearish. Then we got the rejection of the previous week's low. We got the failure of the fair value gap on dollar index. And so it made sense to then see this as a buy day. But now we're just going to continue with that thought until proven otherwise, until, FOMC happens and then maybe it comes all the way back down. Who the hell knows? I'm probably not going to trade tomorrow because it's FOMC. Unless I get a really clean scalp early in the day before the news. But I don't anticipate that to happen. I expect to just kind of stay range bound. I'm probably going to accept that I might not have a trade for the rest of the week at this point. So I'm glad that I got my 2R yesterday on S&P, my 2.5R today on S&P again. And I'm very happy to just sit on the sidelines and watch. Overall, very happy with my performance this week and hope to keep it up into next week.